What's up, guys? Happy Monday. I'm coming back off an awesome weekend. I went on a men's retreat and just had a wonderful time, and God was able to speak to me in a lot of ways about so many things, and I'm continuing to let Him do so. And so this Monday, I just wanted to kind of chat, just us two friends here, and talk about some of the things that I see going on in our housing market and what it may look like next year. So, I'm in the mortgage business. Everybody wants to know about interest rates, right? And what the rates are doing. Um, and I was listening to the Fed chairs and reading all the commentary, and they say it's not political. Um, I don't know where I stand with that. I don't honestly know if it's political or not, but what we do see is the rates are moving, man. It's been crazy. Like we had a couple day window where rates dropped and then they went right back up. And although right now, year over year, rates are almost a half a percent lower than they were last year. I'll pop the chart up here. There's still conventional rates, national average in the low sevens. I mean, we're back into the sevens. Is that a healthy market? I don't know. The reality is it is stopping people from buying houses, and it is keeping people from selling their houses, which frees up new inventory. So we've got a couple different problems going on right now that needs to be addressed. Normally the market has a way of ironing itself out, and then also historically we've had big government step in like Big Brother, and come in and try to make things better and sweep things up. The current Fed members, I'm listening to them talk whenever they do interviews. I like to tune in because it kind of lets you inside their thoughts and where they're going. They're really all they're focused on right now is curbing inflation, flattening out. So they're taking all the data that's coming in from the president-elect Trump, and with all the way the stock market has really rallied and the bond market has rallied. He's talking about tax cuts. Trump is known for a lot of government spending. Trump is also known for a healthy economy, and where there's a healthy economy, people spend more money, which leads to further inflation, which is the big fear. So the feds right now are just trying to take all the data that's coming about and make the best decision that they can. Are they making the right decisions? I don't know. I'm not the judge of that. I'm just kind of along for the ride. But it is interesting to see what decisions that they are making. And basically, that they right now they're on a 12 to 18-month path to finding the best neutral rate. So when the feds lower the interest rates, spending goes out of control, right? People start spending, which drives the price of everything up. The more people are buying, and the law of supply and demand. So where is the good neutral with Fed rates? We don't know. We've yet to find that. We've got to find that balance, and hopefully we find it quick. And as far as the housing market and mortgage rates, we've got two big key topics, so to speak, that we've got to address for next year. Number one is going to be inventory, and number two is going to be housing affordability, which interest rates play into that, right? Nobody wants to be in a mid to low 7% interest rate and paying full peak retail price on homes. And that's kind of where we're at right now. If you want to buy a house, you're going to have to pay the full peak retail. We're not really seeing a decrease in housing prices. Is this the new norm? It could be a new norm. I don't know. I think time will tell. And that's one of the things that I think is going to shake out next year. We're going to see if this is the new norm, if, dual household income is needed, pretty much most houses, to be able to buy a house. I was at a conference last week and an economist was speaking, and I don't have my notes here in front of me, but basically, the to buy the median price home in the United States, a family would have to be at about $110,000 a year dual income just to buy a median home, priced home. So I'll do the math on another video. I'm kind of curious to see, the average home price here in Middle Tennessee, is probably in the mid fours. And to buy a house in the mid fours, you're going to need to have an income of close to $120,000, and that's assuming you have absolutely no other debt. So, I don't know how many households out there are making $120,000 to be able to buy an average, $450,000 house. It's scary. We got a lot going on, especially us as real estate professionals. We don't know how all this is going to shake out, and I'm looking at my kids coming into this into this world and in the housing market and in the job market. And guys, at the end of the day, all we can do is pray, right? So, anyways, that's some things to look out for next year with home affordability. Another thing I forgot to mention is also insurance. I'm not sure if you've shopped homeowners insurance lately, but it is on a sharp spike as well. So, anyways, that's what's going on right now, and I'll keep you guys in the loop on what's going to happen next year. I'm probably going to be doing more longer videos like this to really dive into what's going on, because I've been trying to do it in a minute or two, and it just doesn't seem to be working out. So, hopefully, you guys are receptive to this, and if you'd like to have any other comment or dialogue, pop it in. I'm probably just going to keep focused on YouTube for now and not really worried about having to share on 100 different social media platforms. I actually just deleted all the social media off my phone because it's too much. So, all right, love you guys.